everyone, good morning. It's Larry FX again, and we are basically talking about the chart where we have this volatility 10 index, and the volatility 10 index actually has been dropping for a really long time. We had a retracement and a break of trend, which we are currently taking in our swings, which we'll be holding. Now, this is the low which we are expecting market to get to. And then this is the break of trend line we can connect, which market actually broke. So that being the case, we can now come down to the 4 hours time frame. Now on the 4 hours time frame, we just want to see the reaction of the market. On the 4 hours time frame, not really clear, we'll go down to the 1 hour time frame. So now what have we been looking out for? We've been looking out for market to swipe break of structure, to give us break of structure, retest and all of that. Now we had a break of structure at this point, and market pushed to the upside, gave us this liquidity grab, gave us break of structure at this point. And then this was an entry which we took, and which has hit take profit. We took this trade earlier before now, and we finally hit take profit at this point, but give us another entry while even heading for our take profit. So it gave us another entry while heading for our take profit. So now within the trade, it gave us this liquidity grab and also gave us the break of structure. Now this break of structure was really important because after the break of structure, we were able to have our retracement, which was market retracing back into the level which we used for our entry. Now this is actually where we got the first entry, which hit take profit here. Now this was the next entry using that high, the new high which was created, and the new low, which is our level of take profits. Now this was what happened, and this was how we got our sell, our second entry. So this exactly was our second entry, and this was it basically. This was it. So on this one, our risk to reward was basically we risking this particular area and taking profit at this point, which was okay. It was a cool trade, and this was our risk for the first trade, and our final take profit was this area too. So we were able to get two entries, which we call it maximizing our entries. So this was it for this particular market. Now having done that, we clearly now are on the new level where we are trying to pick the new entry. Now this is a level of retracement and this is a break of structure. We can clearly see that after market has hit this take profit, I would simply like to shift this so that we can see what you can see things clearly. So after market did this, if we should come to the 15 minutes time frame, I believe you'll be able to see it clearer. Now what did we see on the 15 minutes time frame? So on the 15 minutes time frame, we had market break structure at this point. We had market swipe liquidity at this point. and it gave us a clear break of structure at this point before even the current one we are operating or working with. Now, that being the case, we simply mark our level, which is our high, and then we mark the swing low. So having done that, you all can clearly see what has happened. Now, what happened here? Markets moved up from our flip zone, which is this particular level. So market moved from this flip zone, giving us our push to the upside, our drop, push, drop, push up, here creating a new liquidity and giving us a new break of structure. But then what can we see? We can see market did not hit this particular entry. So if you are taking, basically this actually was a trade taken using our flip zone. So how would you have set your entry and stop loss? Now, entering from this particular level, you would have simply set your stop loss so entering from this level, you would have set your stop loss exactly at this particular high, thereby risking this point, risking from this area to this area, and then spreading your take profit down to this particular point. So this is your risk, and this particular trade has played out more than currently you can see the trade is, this is a 1 ratio 3.95, which is almost 1 ratio 4. But then the trade is already, it has already played out almost 1 ratio 3. So this is just it, nothing much. The only thing we can simply do on this market is we either wait for this particular liquidity that has been created at this point to come and get tapped, and then we can jump in for our entry and maximize our profits. Take trade from here and from this new break of structure, and we can maximize our profit on this particular next reversal. Now, apart from this particular move, one thing I can clearly see also on this chart is we had a clear break of trend line. So if we should connect our trend line from this particular point to this level or this level, we got a break of trend line, which is a clear one, and after the break of trend line, market continues plunging downside. Now, this actually will not, except we kind of increase our risks to be able to make a certain amount of profit here. If not, we won't be able to capitalize on this particular trade. So that's it for the volatility 10 index. I wish you all a profitable weekend, and do have a wonderful week. Now, just before I end this video, I'll show you what we will be looking out to take, so that even in my absence, you can be able to create the entry. Now, what we'll be looking out for market to get into this level and drop. So this is exactly what we are going to be looking out for, because market has created a new high, created a new liquidity, a new break of structure. So when it breaks this low, we look out for market to get into this area, either the 0.618 or 0.79, and then we rally down. So you can take a swing, you can also just hold your trade that way. This is actually a very wonderful trade. So that's it for now, guys. Peace.